If you have excess value in IGST, you can use it for IGST, CGST, SGST. The tax paid at the time of purchase, if it is more than tax paid at the time of sale, is called as excess credit. Compulsory question for 10 marks. Conditions to claim input tax credit are eligibility criteria to claim input tax credit. A warm welcome to all. This is your other sir, lecturer in Vidhyaashram, First Grade College, the Temple of Excellence. Now we are discussing your Unit 4, Session 1, Goods and Service Tax, GST. In this, we will discuss input tax credit. In the basic classes in your Session 1, regarding the definitions, the meaning of GST, at that time, I explained you what is input tax credit. We will do problems on input tax credit, and this will be your 15-mark problem in your examination. In today's session, we will discuss about the meaning, eligibility and condition for taking input tax credit, manner of distribution of credit by input service distributor. As I told you, ISD. Your most important for 2 marks, you have to expand the abbreviation of ISD, utilization of ITC, input tax credit, ITC availment utilization revised model. These are the topics you are supposed to learn in today's session. Now, before we get into input tax credit, practical problems, we will understand what is input tax credit. Now, input tax means tax paid on inward supply and capital goods and services. The tax paid on input are available for set-off against the taxes payable on outward tax supply. I'll give you an example. For example, outward and inward. Outward, it is always on sales. Inward, it is always on purchases. Now, you bought a raw material. What price? Assume that for 100 rupees you bought. The tax will be 18%. It will be 18. And after buying raw material, you made some addition to that value added. So you converted into finished goods and you're selling that product for 200. Into 18%, it will be 36. Now see, 18 rupee worth you are selling for what price? 36. Now, 18 rupee was input tax. Remember, inward means what? Purchase. You bought for what price? 100. On that 18%, 18 rupee. Outward means 200. Your selling price into 18%, that will be 36. 36 minus 18. No need to pay 36 rupee tax. Why? Because at the time of purchase, already you paid 18 rupee. Now, from 36 minus 18, your answer will be 18. Hope you are clear. Any doubt? No. Now, this is what your calculation. From 36, we deduct 18. The remaining answer will be called as your input tax credit. Now, this 18 rupee you are supposed to pay. Assume that 200 is the purchase price, 100 is your selling price. I am swapping that. 200 is your purchase price, 100 is your selling price. Assume that at the time of purchase the price was high. At the time of sell, it is outdated. Nobody is interested to buy. Then what happens? Half of the price you are supposed to sell. Now, at the time of purchase, you paid 36 rupee. At the time of sale, you are paying 18 rupee. So, you will get minus 18. You paid extra, excess. This excess is called as input tax credit. Hope you are clear. What is the extra tax paid? The tax paid at the time of purchase, if it is more than tax paid at the time of sale, is called as excess credit. In the next time, when you do any purchase or sales, if anything is payable, this amount can be utilized. Hope you are clear. Yes. Now, Section 2, subsection 6(2), CGST Act defines input tax as follows. Input tax in relation to a registered person means the central tax, state tax, integrated tax or union territory tax charged on any supply of goods or services both made to him and includes. These things I'll explain you while doing the problems. Now, after this meaning, in the meaning it says the tax payable under the provision of subsection 3 and 4 of section 5 of integrated goods services tax charged of IGST. Similarly, all the theory part you are supposed to remember. No need to mug up because you will not get any theory other than what is input tax credit or other than what is ISD, input service distributor. Now, eligibility and condition for taking input tax credit. Can everybody take input tax credit? The answer is no. Everybody cannot take input tax credit. There are certain rules and regulations are there. Few members, if they fulfill those conditions, then they are eligible for input tax credit. Now, only registered person eligible to take input tax credit. He should be in possession of tax invoice or debit note or such other tax paying documents as may be prescribed. There are certain documents are there they are supposed to submit. He should have received the goods or services or both he must be received. Next, the supplier should have actually paid the tax charged in respect of the supply to the government. See, he should have actually paid the tax. Tax has to be already paid. If it is payable, unpaid will not be considered. Then he should have furnished the return under the section 39. The GST return has to be filed to claim input tax credit. Again, I'll repeat this. First one, he is eligible only of possession of invoice. Then he must be received the goods. He should have actually paid the tax. And the last one, return is already paid. After doing all this, he is eligible for input tax credit. Now, when goods are received in installment, ITC can be claimed only when the last lot is received. Assume that already the dealings are done, the trading discussions are done, and the goods are served on installment basis for 6 months. Jan, Feb, March, April, May, June. Every month they are providing goods. Means up to the 6th month they cannot claim ITC. When the last goods is delivered, when the last lot is delivered, then he or she eligible to claim input tax credit. Then no ITC will be allowed on depreciable asset. For example, the asset is depreciable, then ITC you cannot claim. Then where the goods against the invoice are received in lot or installment, the registered person shall entitled to take credit upon receipt of the last lot or installment. So these are the important point. This is very important. Very important. Why? Because conditions to get are condition to claim ITC. What are the conditions? 1, 2, 3, 4, 5, 6, 7, 8, 9. Yes, these are the conditions to claim input tax credit. Compulsory question for 10 marks. Conditions to claim input tax credit are eligibility criteria to claim input tax credit. Now, input service distributor means an office of the supplier of goods or services or both. Now, input service distributor means who? Now, input service distributor means an office of the supplier of goods or services or both. For example, you have a head office in Bangalore. That head office person is called as input service distributor. Your office is in Delhi. Then you are called as, your Delhi office is called as input service distributor. Now, it receives tax invoice issued towards receipt of input service or such other document as prescribed for the purpose. See, all the documents, whatever the conditions are there, eligibility criteria, the document has to be provided by whom? Input service distributor. Now, manner of distribution of credit by input service distributor. What are the conditions are there? What are the rules and regulations are there to claim input tax credit by input service distributor? Now, input service distributor means an office of the supplier. Already you have learned. Next, it received tax invoice. The tax invoice has to be is received by them. Such office distribute credit of ITC. ITC, already I told you, the excess tax paid over the sales, over the output. The input tax is more than output tax. We call it as input service distributors can claim ITC. Now, the said office issues invoice for distribution of the credit. The invoice is must. Without invoice, you cannot claim ITC. Remember this. If you are not having the original bill, you cannot claim that ITC. Now, utilization of input tax credit. How to utilize that? Now, GST is a dual concept system composed of two rates, central and state. As you know that whatever GST we collect, we make it split. Half of the GST will go to central, half of the GST will go to state government. Now, collect will go the concerned state government in which the sale is made. Whenever sale is made within a union territory, UTGST is applied in place of SGST. In case of interstate, IGST is applicable. Now, we'll go with one problem so that you will understand your input tax credit clearly. Now, before that, we'll understand ITC availment utilization, revised model GST, utilization of ITC, revised model GST law. Now, if you have CGST, if you have SGST, if you have IGST. Now, remember, credit of CGST to be utilized subsequently. It can be used for IGST and IGST. Now, credit of SGST can be claimed for SGST and IGST. Credit of IGST can be used for IGST, CGST, SGST. Remember, while doing problem, I'll explain you clearly. If you have excess value in IGST, you can use it for IGST, CGST, SGST. If you have excess value in SGST, remember, SGST cannot be used for CGST, CGST cannot be used for SGST. That is a logic. Now, SGST, you never get CGST. You cannot utilize for CGST. And CGST, you never utilize for SGST. Now, CGST can be utilized for CGST itself or IGST. Now, we'll go with one problem. As I told you, a 15 marks problem. This is an important one. Now, compute GST payable from the following. Now, in this, there is no calculation of input tax credit. Only we are calculating GST. Now, input. Always remember, input means tax on purchases. Output means tax on sales. Now, 7,500. SGST is 7,500. Output tax is 69,000. 69,000. IGST is how much? 90,000. Now, if you calculate this, now, your output tax, 69,000, 69,000. Input tax, 7,500, 7,500 and 90,000. It is already given. Now, if you minus 0 minus 90,000, it will be same. 69,000 minus this, 61, it will be your 61,500 same. Now, this will be your 61,500 only. But in this, now 61,500 set off from IGST. How much you are set offing? Now, 61,500 full value set off means the answer is nil. How much you can set off from IGST? Now, from 90,000, If you set off 61,500, already you have done set off, the remaining will be 28,500. That is done here. If you set off, the remaining taxable will be 33,000. Hope you are clear. This 90,000 extra amount can be used 61,500 here, 28,500 here. So total 90,000. The maximum required is 61,500. We used. The remaining amount we can use it for this one. From 61,500, if you minus this, you will get 33,000. Hope you are clear. Now, you may ask, sir, why can't we use 61,500 for this person? We can use. You can give half off also for these two. It is all left to you. This 90,000 you can use for these two. Hope you are clear. Yes, this is what your input tax credit calculation. Now, we'll go to the next one. ABC Limited provide the following information. Purchase of input 11,500. You have to calculate GST. Purchase of capital goods at 28%, 30 lakh. Audit service is 1,75,000 at 12%. Health insurance 1,60,000 at 12%. Market research service 75,000 at 12%. Find out eligibility in the hands of ABC. A registered company is not a registered company. Both you are supposed to calculate. First one we will do it for registered company. Now, as per this, if you calculate purchase of input at 18%, 11,50,000. On that you calculate 18%, 9% here, 9% here. 2,07,000, 2,07,000. Similarly, now purchase of capital goods at 28%. On 30 lakh you calculate, you will get this answer. Similarly, audit service is 12%. 12% you can go with 6%, 6%. Eligibility criteria. The full value only calculated actually. On this 18%, 2,07,000. On this 28%. On this 12%. Then health insurance service on this 12%. Then market research service on this 12%. Now, remember, your health insurance is not eligible for ITC. Remember, your health insurance will not be eligible for ITC. Now, add everything. You will get 10,77,000. Now, case B. Not registered person. See, there are two things are there. You are calculating ITC for registered person, calculating ITC for non-registered person. If not registered person, then if your company is not registered, then no input tax credit is available. No need to do any calculation because if you are not registered, you are not eligible for input tax credit. Now, once you are done with that, input tax credit means the credit of input, inward supply in relation. All these things, theory part, not much important, but for your reference, you can read it once. Now, we'll go with one problem on input tax credit. In this, problems on goods and service used for business. Now, company provide the following information. These are easy problems. Purchased input for 8 lakh with 12% GST. Purchase truck. Truck means what? Capital goods. Remember, 24 lakh at 28% tax. Purchase shoe and gloves, 75,000 with 12% GST. Purchase gift hamper, 40,000 with 12% GST. Audit service from CA Raj, 95,000 with 12% GST. Outdoor catering services from Ram, 75,000 with 12% GST. Now, if you calculate purchased input, 12%, 8 lakh. So, 8 lakh into 12%, you will get 96,000. Eligibility is 96,000. Hope you are clear. Come to second one. Purchase of truck, 28%, 24 lakh into 28%, completely eligible. Purchase of shoe and gloves for employee, 12%, 75,000 into 12%, you will get 9,000. 9,000 completely eligible. Purchase of gift hamper for employee, 12%, 40,000, 4,800. Remember, gift hampers are not part of business, so we don't consider for your input tax credit. If any product is used for manufacturing, then only we can use it for input tax credit. Audit service, 95,000, 12%, 11,400, completely available for input tax credit. Outdoor catering, again food service. Food service will not be part of your ITC, and 75,000 into 12%, it is 9,000. The calculation is nil, not eligible, not for further business. Hope you are clear. This is what your calculation. You have to write all the points and you have to calculate a percentage. If not directly related to business, don't consider for ITC. Similarly, we'll go for the next one. In this, from the following independent case, calculate availability of ITC. GST 28% transportation of input. Purchased a truck for 28 lakh. The percentage is 28%. Then, truck value is how much? 28 lakh. On that, calculate 28%. The answer is 7,84,000. ITC completely included. Why? Because the truck is used for what? Business purpose. To transport the raw material, finished goods, or any materials to transport one place to another place. We use that truck, and that is for business purpose. Similarly, we'll go for the next problem. As per this problem, JJ Traders supplied goods at 48,000. They received inward supply of 23,000 at 18% tax. In this, 48,000, 9% and 9%. If you calculate, you will get your answer. CGST, SGST, the total value. So on this also you calculate. GST payable, add both. In this, outward and inward, the GST payable will be this much. Always remember, the inward tax on purchases should be deducted from tax from sales, that is outward tax. Then Traders supplied goods for 75,000. They received inward supply of goods 59,000. The supplies has charged 18%. Calculate. Simple one. On this, outward supply and inward supply. Outward supply is 75,000. Inward is 59,000. 18% split, 9% each. If you calculate, this will be your tax liability. We have split it and we have written total. Now, if you go to the next one, as per this, intrastate this much, interstate this much. Intra means what? Inside the state. Inter means one state to another. If it is interstate, IGST will come. Intrastate, CGST and SGST will come. Remember this. And opening balance of ITC, at the end we are supposed to minus. The supplier are exclusive of 18% tax. Now, simple one. First you find out outward tax, then you find out inward tax. Outward minus inward. The balance should be adjusted with input tax credit. What is input tax credit? See, already you have a credit of this much. This has to be deducted. I'll show you that. First one, computation of output tax. Output tax means what? Tax on sales. Now, intrastate supply nil, CGST, SGST. Interstate supply, it is 1,98,000. On 11 lakh we calculated. As I told you, interstate means only IGST. Intrastate means CGST and SGST. Both will come. When you calculate, the total outward is 1,98,000, 2,70,000, 2,70,000. 1,98,000 IGST, CGST 2,70,000, SGST 2,70,000. Once you are done this, you have to go with inward tax. Inward tax, 18 lakh 50 into 18%, 4 lakh 50 into 18%. Calculate, make it half of 1 lakh 66, 81. That total is 81, 166, 166. Hope you are clear. Now you are supposed to, the previous one, 1 lakh 98 is IGST minus 81. 2 lakh 70 minus 1 lakh 66. 2 lakh 24,500 minus your answer. 1 lakh 66,000 minus your 2 lakh 24. Like that you are supposed to minus. From outward you have to minus inward tax. Now from outward 1 lakh 98 minus 81. 2 lakh 70 minus 1 lakh 66. 2 lakh 70 minus 1 lakh 66,500. Now if you do that, this minus this, this minus this, this minus this. Now see all the calculation they have done. 198, 270, 270. All the calculation, opening balance already you have. Opening balance given in the question. See, 93, 58, 155. 93, 58, 155 minus tax on inward supply 81, 166, 166. When you minus, you will get all this calculation. Hope you are clear. Yes. Now, so similarly, if you go with that, 198 is your outward. Your total ITC 174. You calculated in the previous one. Your inward plus opening, both you have added. You will get 23,500. 23,500 can be adjusted. The tax is nil. 270 minus 224, 45,500 is payable. 270 minus 371, it is 51,500. So 51,500, this amount can be adjusted here. So the remaining is 28,000. Hope you are clear. Yes. Yeah. The next one, this is the easiest one. You have to calculate on the basis of turnover. SS Limited has its head office at Bangalore, has 4 branches at Kerala, Mumbai, Pune and Andhra Pradesh. It seeks the services of RR Enterprises. Simple one. There are 4 branches are there. 1 head office is there. And what is the total GST payable? 9 lakh 60. Simple one. You have to add all this. 14 lakh plus 18 lakh. How much it is? 32. Plus 10. 42. 62. It is 70 lakh. Or else you can make simplification. Cancel all the 5 zeros. 5 zeros. 5 zeros. 5. 5. 5. Your answer will be 14 is to 18 is to 10 is to 20 is to 8. Again you can simplify with the table 2. 2 7s, 2 9, 2 5, 2 10 and 2 4. 7 is to 9 is to 5 is to 10 is to 4. If you add everything, 16, 21, 31 and 35. Now, this will be your calculation. Simple one. You understood how did I made simplified this step. Now, what is the tax portion? 9 lakh 60. We are calculating for Bangalore. What is the Bangalore? 7. What is the total? 35. 9 lakh 60,000 into Bangalore is 7. Total is 35. That will be your answer. Hope you are clear. Similarly, when you are doing for Kerala, 9 lakh 60,000 into, what is the answer? Kerala, 9. 9, what is the total? 35. This much only your calculation. Hope you are clear. Take 9 lakh 60 as a common. Take individually, divide by total. Then you will get your answer. Now turnover, see they have added everything. I made simplified, but the earlier stage 70 lakh without doing any simplification, they have taken complete value 70 lakh. Branch turnover divided by total turnover into GST. If you do all the calculation divided by 70, we made it as divided by 35. The answer will be same. You can do this calculation. So this is what your input tax credit, branch turnover. These are the two major topics. Along with that, you have to remember what is ITC, eligibility criteria for ITC, who are called as ISD, input service distributor. All these topics very important for your examination. Thank you.